traded funds trade, and if you haven't heard much about them, listen up. They're known as ETFs. They are the fastest growing type of securities in the U.S. ETFs, a lot like mutual index funds, but investors buy a share of a whole fund and it trades throughout the day like a regular stock. It's not the only difference, though, in this investment option. Joining us now is Sodano, Chairman and CEO at the Amex, where most of those ETFs do indeed trade. Welcome to Market Call. Good to have you here.
Thank you very much, Rhonda. Good morning to you.
Morning. You know, ETFs have come a long way since the beginning, and I think the beginning was when everyone started talking about spiders. Let's talk about the growth since then.
Well, the growth has been quite phenomenal. The American Stock Exchange introduced and invented the first exchange-traded fund with the spider back in 1993. Actually, up until this year 2001, the assets underlying ETFs doubled in level every year for 6 consecutive years. And even in this past year, 2001, where all the underlying indexes and the ETFs have pretty much been in negative territory, the level of assets in ETFs continued to grow, actually grew about 24%, where we now have $87 billion in assets underlying all these products that trade here on the American Stock Exchange. So growth has been phenomenal.
Hi, Sal. As I'm sure you know, closed-end funds were very, very popular in the late 80s, early 90s. Now they're kind of in a backwater. Exchange-traded funds have come to the fore and are growing, as you are saying, quite rapidly. What will enable the exchange-traded funds to continue growing where the closed-end fund couldn't?
Well, part of the expertise we have here at the Amex and in the marketplace in general is you need to continue to innovate. And we think that we'll be able to continue to provide different variations on product. For example, all the products that trade now on the Amex, for the most part, are equity-based and are based off of indexes. You'll see shortly that the Amex will be introducing its next level of innovation to the marketplace. We'll be introducing debt-based products. And even more importantly, from an overall change in product line, we have been working for some time now on actively traded or actively managed mutual fund type products. So converting the actively managed mutual fund into an exchange traded fund product is not too far away. As a matter of fact, we have 2 patents pending in Washington, and we're quite happy with the prospectus of what we see in terms of new product.
At this point, most of the ETF interest is from whom?
Well, it depends on the product. Some could be more professionally oriented. Some could be more retail oriented. For example, an iShare product is more of a retail base. Look at the QQQ. There's interest globally. The professionals would use a QQQ as a hedging tool, as an investment tool themselves, but yet the individual investor would use the QQQ to get instant access to the NASDAQ 100. So it depends on the product. Right now, they're both very, very popular with the professional user as a hedging tool and investment tool, and increasingly we're seeing interest by the retail investor.
Sal Sodano, thanks for joining us on Market Call to tell us a little bit more about ETFs. We're going to focus in on some economic news now. A big drop in a key inflation measure right before Fed Chairman Greenspan's